All right, there we go. Let's go ahead and get started. Thank you all so much for joining us today. My name is Sarah Grover. I am the Executive Director for the Volusia County Bar Association. I'm excited to have you for our webinar titled Preparing for 2025, Understanding the New FinCEN Regulations. Before we get to that, I'll talk about a couple of the upcoming events we have. I'm going to post our newsletter in the chat, so there's a link to our newsletter. And we do have a couple section meetings coming up in the month of May. So on May 16th, we have a solo small practice section meeting. On May 22nd, we have our elder law section meeting. And on May 30th, we have our family law section meeting. So if you are in any of those sections, I encourage you to attend that. And then on June 16th, we will have another virtual webinar by Jim Vicaros on being a lawyer, which is an ethics CLE. So it looks like we have many people on the line. So I will go ahead and pass it over to Scott, who will be our speaker today. If you have any questions, please feel free to type them in the chat and we'll be sure to get through them throughout the call. All right, take it away, Scott.
Okay, thank you so much. Thank you all for letting us appear today with the webinar. I apologize, my camera is not working. So all you're going to see is my slide presentation, my PowerPoint. I wanted to give everybody my email address. If you have an issue regarding this presentation or an underwriting question regarding a commitment, my email is scott.fowler@stewart.com. Feel free to email me any questions that you may have about this that may come up after the presentation. The presentation is preparing for 2025, understanding the new FinCEN regulations. And the FinCEN regulations and the GTO have really blossomed from its initial intention. It's going to be the now and later, what we're doing now and what's going to come into effect in December of 2025. But before we begin, let me just go ahead and show you the disclaimer. The information in the presentation is for informational purposes only. None of the materials or opinion is offered or should be construed as legal advice. Communication of information by or through these means, your receipt or use of such information is not to be construed as legal advice or constitute an attorney-client relationship. I always tell people when I begin these presentations, this is really information for you. And if you need a legal opinion, to seek out a licensed practicing attorney in the state of Florida for an actual legal opinion. Course accreditation. Credit for 1 hour of CLE credit has been approved by the Florida Bar for general and real estate certification under course number 2500970N as in Nancy.
Scott, give me just 1 second. I'm gonna text you real quick.
And I popped in Scott's email as well as the CLE number in the chat. So make sure you all jot that down if you need it. These are self-reported CLEs, so they will not be uploaded for you. So make sure you do that.
Let me see if I can. Is my audio coming through okay?
It's a little jarbled.
It's a little washed out.
Mm-hmm.
Okay. Let me see what I can do here. How about now?
I think that's better.
Yeah.
Let's try it.
See if I can make it even better. How about now?
I think that's better.
I think that's gonna be a lot better. Yeah.
Awesome. Thank you.
Thank you.
Sorry about that.
No, thank you for telling me. Okay. FinCEN is an acronym for Financial Crimes Enforcement Network, and it's a division of the U.S. Department of the Treasury. The FinCEN's mission is to safeguard the financial system from illicit use and combat money laundering and promote national security through the collection, analysis, and dissemination of financial intelligence and strategic use of financial authorities. FinCEN, through the Department of U.S. Treasury, publishes regular alerts and bulletins relating to anti-money laundering, administers the BOI, which is the Beneficial Ownership Information Program, monitors business practices, and administers GTOs, the Geographic Targeting Orders. Now we're going to go through a lot of these, so don't be discouraged by the acronyms. So we're going to talk about anti-money laundering and the beneficial owner information and the GTO, so you'll see how this all comes into play. It's really an issue of what we're doing now and what the GTO affects now and later, what is going to be happening in December of 2025, because the rules have now been or will be expanded exponentially. And I'm going to show you through the presentation how the GTOs and this new rule is going to take effect and what it's going to encompass and the responsibilities that are going to be inherent with the new rule. So let's talk about right now. How does FinCEN affect a real estate transaction? So we start over here on the left. Both lenders and title officers in specified real estate transactions have reporting requirements under the GTO. Title agents are considered covered businesses under the order and responsible for GTO reporting. GTO first issued in January 2016 and covered Manhattan and Miami. Since 2016, every 6 months, those GTOs seem to have expanded to include other jurisdictions. Originally, the GTO is for 6 months and it republished every 6 months with frequent additions to affected areas. The most recent GTO issued is effective October 16, 2024 through April 2025, and it now covers property located in 14 states in the District of District of Columbia. On April 14th, 2025, there was another GTO that came out, which added some jurisdictions in Texas and California. So currently the GTOs are required reporting for Miami-Dade, Broward, and Palm Beach, Hillsborough, Pasco, Pinellas, Manatee, Sarasota, Charlotte, Lee, and Collier. So what are the requirements of the GTO currently? It's the purchase of residential real property in those designated jurisdictions in those areas, purchased by a legal entity. Purchases by a U.S. publicly traded company, individuals, and trusts do not need to be reported. And it's important to remember that trusts not need to be reported under the current GTO requirements. And I'm going to explain and show you that rule has now changed. The purchase price is $300,000 or more, except in Baltimore, where it's $50,000. The purchase is made without a bank loan or other similar form of external financing. Come December 2025, that rule is going to change, and you'll see how Even if there is a lender involved in the transaction, it has to be a specific type of lender. Currently, the purchase is made, at least in part, using currency, check, money order, funds transfer, or virtual currency. Prior versions of the GTO included reporting requirements for trusts and exempted finance transactions, but did not distinguish between financing types. Current GTOs only exempt reporting where financing comes from entities with AML programs and STAR requirements, and I'll explain what those are in just a moment. Here's some facts about the current GTO. As of August 15, 2019, title insurers had reported 23,659 transactions under the GTO. 37% of those transactions matched an existing SAR, which is SAR stands for Suspicious Activity Reports. The GAO report found that FinCEN found 38% of the filed reports failed to identify a beneficial owner in the proper data field. And we're going to talk about beneficial owners under the new rule. Both issues where information wasn't provided or where they simply provided in the wrong field due to confusion with the reporting form. For the FBI, 7% of the GTO reports identified individuals or entities connected to ongoing cases. More than half of those were involving white-collar crime. So new rules coming soon. So December 1, 2025. Last year in August, FinCEN issued a final rule requiring certain industry professionals to report information to FinCEN about non-financed transfers of residential real estate to a legal entity or trust. The nationwide reporting framework will replace the GTOs and goes into effect December 1, 2025. So the GTO, which really was only relegated to a few jurisdictions and certain states, is now going to be nationwide. So let's compare requirements, current GTOs, and what's going to happen under the new rules. The threshold amount under the current GTO is $300,000 and over. The new rules, there is going to be no threshold. The property type is going to be residential only. It has now been expanded to include residential and vacant lots. The reporting party originally was the title agent or the insurer. And this is a rather vague term, which I'm going to explain as we go through this presentation. We now have a cascading list. It's a hierarchy of who is going to be responsible for reporting. Property location under the current GTO only in specified areas. So those counties in Florida that we just discussed is now going to be expanded to every county in the state of Florida and every county in every state in the United States. Disclosing parties used to be only buyer entities were disclosed. Under the new rule, the reporting party, which is most likely going to be the closing agent, the signer, the seller, and the buyer are going to have to be reported. Transfers under the new rule are going to be reportable when they meet the following criteria. The property is residential real property. That also includes land, undeveloped land. The transfer is non-financed. The property is transferred to a legal entity or a trust. So under the old rule, the trust did not have to be reported. Under the new rule, it does. And there are exemptions that do apply. Transfers meeting the rules requirements must be reported regardless of the purchase price or the value of the property. Gift transfers are thus subject to the rule. So even if you're doing a real estate transaction and it's a gift from mom and dad to son or daughter or both, it's got to be reported. Cascading reporting persons. This is going to be who's responsible for reporting the transaction. And there's a list of 7 different functions that a real estate professional may perform in a transfer of residential real property with the reporting obligation. So, for example, the first function on the list is the professional listed as the agent on the closing or the settlement statement. That's generally going to be who's going to be responsible for the reporting. If no such professional is involved in the transfer, then the reporting obligation applies to any professional that performed the second function on the list. That could be the person who prepared the deed. And I'm going to go through that list with you in just a few minutes. Reporting list. Under the rule, the following persons are responsible for reporting a reportable transfer. And I highlighted this in red. The person listed as the closing agent or settlement agent on the closing or settlement statement for such transfer. 2, if no such person as described in 1 above is involved in the transfer, then the person that prepares the closing or settlement statement for the transfer. If that person is not available, it's going to be a person that's involved in the transfer, the person that files the deed with the recording office or their instrument that transfers ownership of the residential property. 4, if the persons described in 1, 2, and 3 above are not involved in the transfer, then the person that underwrites an owner's insurance title policy for the transferee, such as a title insurance company. Number 5, if 1 through 4 are not available, then the person that disperses the greatest amount of funds in connection with the transfer. And number 6, if you don't have 1 through 5, then the person that prepares the deed, or if no deed is involved, any other legal instrument that transfers ownership of the residential property, including with respect to shares in a co-op, the person who prepares the stock certificate. And number 7, if you don't have any of the persons listed in 1 through 6, there could be a written agreement as to who is going to be responsible for the reporting. However, a separate designation agreement is required for each reportable transfer. It can't be a whitewash, all-inclusive from here on out. It has to be a very specific standing or permanent agreement which identifies this particular project, this particular transaction. (31 CFR 1031.320) subsection B, except as set forth in B2 of this section, a reportable transfer is a non-finance transfer to a transferee entity or a transferee trust of an ownership interest in residential property. That's new. That brings in the trusts which were formerly exempt. What is a non-finance transfer? One that does not involve the extension of credit that is secured by the subject property and extended by a financial institution that has a requirement to have an AML, which is an anti-money laundering program. So if you're dealing with a hard money lender, that's going to have to be reported. AML programs are done by the large financial institutions, Bank of America, Wells Fargo. They have their own internal reporting processes for notifying the Department of the Treasury about certain transactions. If this lender does not have an AML program, this is going to be a reportable transaction. So be very careful about who your lender is. What is considered real property under the new rule? It's property located in the US, DC, Puerto Rico, the US territories, and Indian lands, containing a structure designed principally for occupancy by 1 to 4 families. It's also land, undeveloped. It could be vacant lots, vacant land in the US on which the transferee intends to build a structure designated principally for occupancy by 1 to 4 families. A unit designed principally for occupancy by 1 to 4 families within a structure on land located in the US. And fourth is your co-op. You have a share in a corporate housing corporation for which the underlying property is located in the US. Don't see a lot of co-ops outside of Broward and Palm Beach County. I know there's probably a few over in Hillsborough, but those are generally the only 3 counties that I see a lot of co-ops. So that's really, that rule is going to affect a lot of our closing agents in Palm Beach, Broward, and Hillsborough. Next slide. What is not a reportable transfer? The transfer of an easement, transfer resulting from death. So if your customer is acquiring property through inheritance, through a probate, through a trust, it's not reportable. Transfers incident to a divorce. So your customer comes in and they're in the midst of a divorce. One of the spouses has to quit claim the property over to the other. It's not a reportable transfer. Transfer to a bankruptcy estate. Transfers supervised by a court. Transfers for no consideration to a trust, meeting certain conditions. And that's going to be very technical. And I always advise my customers to go ahead and get with a CPA to see if they match those certain conditions. We could spend an hour just going through those certain conditions. Transfers to a qualified intermediary, part of a 1031 exchange, and a transfer for which there is no reporting person. That's going to be pretty difficult. There's always going to be somebody who falls in that 1 through 7 list that we just went through. Who is not a transferee entity? Securities reporting issuer, government authority, state, federal, local, municipality, banks, credit unions, depository institution holding company, money services business, broker or dealers in securities, securities exchange or clearing agency, other Exchange Act registered entity, an insurance company, state licensed insurance producer, Commodity Exchange Act, a registered entity, public utility, financial market utility, a registered investment company, and a subsidiary of an exempted entity. Next slide. Transferee entity information is to be reported. Information for each transferee entity involved in a reportable transfer, the reporting person shall report full legal name, the trade name or doing business as, complete current address, and a unique identifying number consisting of IRS, TIN, or an ID number issued by 4 jurisdictions, and information for the signing individual. Full legal name, date of birth, complete current residential street address, again, unique identifying number, IRS TIN or passport number or tax ID number, and their signing capacity. Information for each beneficial owner of the transferee entity. This is where it's going to get rather tricky, and I'm going to explain beneficial owner on the next slide. So you're going to report the full legal name, date of birth, complete current residential street address, citizenship, and again, a unique identifying number, the TIN, passport number, or tax ID number. So here's the beneficial interest test for a transferee entity, a person who controls at least 25% of the ownership interests. The only way you're going to be able to determine that is to get copies of the operating agreement to see who are the members. Does anyone own more than 25%? And who directly or indirectly exercises substantial control over the entity. Corporations, you're going to look at the bylaws. LLCs, look at the operating agreement. Partnerships, you're going to look at the partnership agreement, and so on. Substantial control includes senior officers, the authority to appoint board of senior officers, direct decision-making on important financial decisions, including transfers of assets, and nonprofit entities are covered. That's a pretty heavy burden, I have to admit. That as an underwriter, I look at organizational docs every day on title insurance issues, who can sign the mortgage, who can sign a deed, and that's just an extra step that is going to have to be implemented into your process and procedures so that you can make a determination of who controls at least 25% of the ownership interests in the entity. Transferee trust information. So when the trust is transferring for each or receiving property for each transferee trust in a reportable transfer, the reporting person shall identifying information related to the trust, the name of the trust, the grantor, date of the trust, the trustee. Information related to the trustee deemed to be the beneficial owner, going to have to report it. So you're going to have to review the trust agreements. Information on the beneficial owners of the trust. So we're going to go through the trust, figure out who the beneficiaries of that trust, and report the full legal name, date of birth, complete current residential street address, their citizenship, again, the unique identifying number, the TIN or current passport number, and the category of the beneficial owner, and information on the signing individual who's signing the deed. Who is a beneficial owner for a transferee trust? Checkmark. Individual trustees, the grantors, the settlers under a revocable trust, individuals other than the trustee with the authority to dispose of trust.
Is that all you're? Is that all you want for lunch?
Sorry about that, Scott. Keep going.
Okay. Individuals other than a trustee with the authority to dispose of trust assets. Sometimes you'll review a trust agreement, and some trusts will have only the trustee with the power of sale, power of disposition, mortgage, lease, etc. But some trusts are designated in such a way that the beneficiaries also retain a contingent authority to do likewise. So in some instances, a beneficiary of the trust can also sell, mortgage, and dispose of assets. A beneficiary that is the sole recipient of income and principal or has a right to demand distribution of substantially all the assets. The only way you're going to be able to determine that is to get the trust agreement. I anticipate we're going to get a lot of pushback from buying entities that don't want to provide that information. And we're just going to have to, leap each hurdle as it comes to us. I have some customers that want to give me redacted trust agreements. And that's usually to protect the identity of people that are involved in the trust. Unfortunately, that's no longer going to be acceptable. We're going to have to know the names of the beneficiaries. We're going to have to know what authority and what power. Entity trustees or entities holding a covered position, and then the beneficial ownership information of the entity. We're also now going to be reporting the transferor information. So information concerning the transferor You're gonna have to report the full legal name, date of birth, complete current residential street address, and also their unique identifying number, IRS 10, tax identification number, etc. That wasn't required before, it is now. Property information to be reported. The street address, the legal description, such as the section, lot, block. If it's a meets and bounds description, we're gonna have to go ahead and block copy the legal description off of the commitment or the title search report and just put that in there. Nobody should be retyping a meets and bounds description. And the date of closing. Amounts paid, information to be provided. So we've talked about who needs to be reported. We've got the transferor, transferee. Now we're going to talk about the amounts. The reporting person shall report the following information concerning each payment, other than a payment dispersed from an escrow or trust account held by a transferee entity or transferee trust that is made by or on behalf of the transferee entity. The amount of the payment, the method by which the payment was made, if the payment was made from an account held at a financial institution, the name of the financial institution, and the account number. The name of the payor on a wire, check, or other type of payment. And the reporting person shall report the total consideration paid. So this is going to be a roadmap for the Department of the Treasury. They're going to be able to see who's buying, who the beneficial owners of the entity are, who is the seller, who's the reporting person, what is the amount of the money, where the money came from, and it's a total roadmap for them to try to squelch money laundering. Who does the reporting? The waterfall. So we went through this. The person engaged within the United States as a business in the provision of real estate closing and settlement service. Closing agent, person preparing the closing settlement statement, person who records the deed, the title insurance underwriter, the person who disperses the greatest amount of funds, the person who evaluates the status of title, the person who prepares the deed with a housing co-op, including the stock certificate, or under the agreement we talked about earlier, the person who is designated in writing with the responsibility of being the person who does the reporting. 9 times out of 10, this is who's going to be doing the reporting, the closing agent. That's where the greatest burden falls. Can you change the reporting person? Yes. There has to be a designated agreement that is specifically tailored for the current transaction that you're working on. Parties may agree to have another person in the waterfall do the reporting through the written agreement. Must use specific agreement for each transaction, so it has to be tailored for your current transaction, and it must include transaction-specific information. Reporting party. We're also going to be reporting to the Department of Treasury the full legal name of the reporting party. So it'd be the title agent or the person who prepared the deed or the person who's dispersing the most. The category of the reporting person in the waterfall. So you're going to designate, I'm number 1, I'm number 2, I'm number 3 of those 7 possible categories. The street address for the principal place of business for the reporting person. This is not going to be very difficult if the closing agent is the reporting person, because all that information is readily available. You're just going to have to fill it in on the form. Where and what must be filed. A reportable transfer shall be reported by completing and filing a real estate report. The acronym is RER. We don't have it yet, set to be disseminated very soon by the Department of the Treasury. excuse me. The new reporting form replaces the CTR form used under the prior GTOs and will be created with participation by FinCEN and industry participants. The required RER shall be filed electronically with FinCEN's BSA system. I went online last night to kind of see where we were, and they do have the forms available for the person who has substantial control, the person with the 25% minimum beneficial interest, but I did not see the RER report, so it is still not out. A draft of the RER was published and proposed by FinCEN in November 2024, and the comment period ran out February of this year. So we are still waiting on the issuance of the final RER. But what I do know about, and I can tell you, is over 100 blanks to be completed in the proposed form, and no expectation that the final form will be substantially different. That's a lot of information for the closing agent to process. It's going to be expensive to implement. Atlee is expecting to create a new collection of forms to assist reporting parties in information gathering. I'm hoping that I'm going to get my hands on it. I should be one of the first at our company to get my hands on the RER report. And when I do, you have my email address. If you send me an email asking me for that report or the link to the electronic form for the Department of the Treasury, I'll be able to send that to you. But right now I don't have it. And there's no provision made in the RRE rule for submitting forms with blanks. How do you obtain the information and who can you rely on? This is the expensive part right here. Staff must be trained to start a collection early in the closing process. When I had my own title company and my own law firm, this was not a concern. But now there's 100 blanks to fill in on a form for every transaction that meets the criteria under the new rule. You can reasonably rely on the parties for information related to most of the information needed for the RER, such as intent to build, addresses, lender status. But as to matters where the beneficial owner information report is involved, certifications from the parties are needed where they assert the facts are accurate to the best of their knowledge. There's no affidavits required, and certified statements need not be recorded. The reporting party may rely on the information certified by the parties unless they have information leading them to believe that the facts are not as asserted. So if you have information or suspicions and you have some evidence that what you're being told is not true, you cannot blindly rely on it. When must you report? Later of either the final day of the month following the month in which the date of closing occurred, or 30 calendar days after the date of closing. Penalties for non-compliance. Civil and criminal penalties included in the RER rule. Criminal penalties for willful violations up to $250,000 in prison terms. Civil penalties imposed for negligent violations and for non-willful failure to file. Record keeping. How often should you be keeping your records and for how long? I always kept my files for 7 years. And after the first of every year, anything that was over 7 years, we would begin to shred. Or if it was an important file, we would download it and keep it in electronic form. Under the new RRE rule, reporting person must retain the records for 5 years from the date of filing the report. The rule only requires retention of certifications and designation agreements. RER, no requirements to retain. Not quite sure about that just yet. We haven't seen the reporting rules yet from the Department of the Treasury. I mentioned earlier the cost of doing this on the local level, but we also took a look at what was going to be the estimated cost to the industry. 850 transactions reportable by the industry annually. FinCEN estimates the cost of compliance to be year one. So in the year 2026, it's going to cost 428 million to 690 million. After that first year, it's estimated to be about 401 million to 663 million. Costs are generally going to be training, reporting, and record keeping. Training, I believe, is going to be the biggest one. It's going to have to be internal training to the employee or employees that are tasked with gathering this information and filling out that form. Questions? I went through that rather quickly, didn't I?
Yeah, thank you so much. We definitely have some time to take a couple questions. Feel free to unmute yourself and ask a question or type it in the chat and I will ask it to Scott.
Just wondering if this level of spending is a target under any of the DOGE spending reduction. That's an awful lot of money to collect an awful lot of information that needs ongoing management.
Yeah, I don't see a connection with Doge on this. The primary focus of this is that the criminals are finding ways around our reporting system under the GTOs. And from what I understand through my conversations with other underwriters, both at our company and with other entities, other companies, is that there is going to be a concerted effort for preventing and stopping the washing of money through our real estate industry. There are a lot of syndicates, not limited to any particular region or country in the world, but they're finding ways around the GTOs. Commercial property, there were some issues with trusts. There were some issues with hard money lenders, where the closing agent rightfully didn't report the transaction because it involved a lender or involved a trust. And this activities reports were popping up in Washington, and these transactions weren't being reported because they didn't fall within the purview of the original GTOs. And it seems to be a real push to shut down the acquisition of residential properties in an attempt to wash drug money and syndicate money. And it's going to be onerous for the first couple of months trying to implement this new rule in 2026. As a former title agent for Stewart, my gosh, I was just sitting there thinking, who in my organization at the time had 37 employees, who could I earmark to compile this information, put it in the report, and have enough information in there that I'm going to get A, audited, or B, a letter from the Department of Treasury that my reports are incomplete, which is going to take up more time on the back end post-closing to fill out this information and get it incorrect. And it's quite a responsibility for people in the organization to fill out this information correctly. There's a lot of information you're going to have to, review operating agreements, review bylaws, review stock ledger books, trying to figure out who the beneficial owners of this are. And we've never had that amount of information gathering by the closing agents. A lot of times what they'll do is I'll get emails, hey, Scott, can you help me out with determining who can sign this deed and who can sign this mortgage so we can insure it? And that's generally, an email back saying, okay, this LLC is going to go ahead and sell this property, or this LLC is buying it. Get me the operating agreement. In 10 minutes, I can look at an operating agreement and I can tell you who's authorized to sign a mortgage. Well, now we've actually got to go a little bit more into it and figure out percentages, who's the beneficial owners of this, and we have to put that on the reporting form. That's a lot. That's a lot of responsibility.
Right. Thank you. Good question. We have another question in the chat from Jeff Brock. Is there any talk of setting a minimal sale price to eliminate gifts, etc.?
I have not heard of it. If it's a gift, it still has to be reported, regardless of the threshold.
And I can actually chime in on that a little bit, Scott. I know that the National Association of Realtors has been working on trying to get some rule modifications to make the gift process a little bit easier, both in this and in other areas, as far as through the lens of purchasing real estate.
Thank you. All right, any other questions? I think we have time for one more question. Make sure we get in our 50 minutes for the CLE.
I put my first page back up so that anyone who may have joined late or didn't write it down, there's my email address at the very bottom.
Perfect. Thank you so much. I also want to mention, while we have time, on August 1st, I know it seems like it's forever away, but it'll sneak up on us. We are having our annual meeting on August 1st. That's back at the Daytona One Hotel. And following the August 1st annual meeting, we will have our first professionalism symposium since pre-COVID. So we are very excited about that. We are in the planning for that. And I hope you mark your calendars for August 1st to join us for our annual meeting, followed by a half-day professionalism symposium. We have several judges confirmed already as speakers, and we have a committee working on that event. So it's sure to be a success. And that's maybe you saw the newsletter where we sent out the save the date for that. There's no registration link currently available yet, but please mark your calendars for that. One last question. What about land trusts where the statute protects the identity of beneficiaries?
That's a really good question. I don't know the answer to that off the top of my head. I will have to look at that.
Good question.
The person asking that question can just send me an email.
Perfect. Yeah.
Yeah, I'll help facilitate that. I'll make sure you get it.
Yeah, I honestly don't know. I've never thought about that. That's an excellent question. And I have to research that.
Perfect. Great. Are there any other questions? All right. Well, thank you all so much for joining. Please feel free to send any of us an email if you have any questions pop up, and I will post this recording as well as the slide deck on our member portal. Join it, and I'll be sure to include it in the next newsletter as well. So again, thank you all for your time. I hope you all have a great weekend and happy Mother's Day.
Thank you, Sarah.
Bye.